What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 4. It's October the 16th, 2023. We made some trades today, so let's get into it. Let's go ahead and jump right into the meat of it. Let's talk about trade number 1 and talk about what we did today. So for trade number 1, I went long here based on the higher low, but I was too early here and my break even got hit. So when I say too early, I say that because if you look at where I went long based off of this previous higher low that got established, which makes sense, right? But remember, when you have a higher low that has a long tail wick attached to it, the prices have a tendency not only to come back to test where the bodies close from, but they'll also come back and test that level where those wicks were at. So for me to go long at the bodies, it's not really respecting the fact that prices can still run down to these wicks. So if I would have put my order towards this wick right here instead of at the bodies, I would have been able to get in and actually catch that 1 point scalp that I was looking for. So right here, I think I made the right decision, but I was just a little bit too early. And when it comes to the higher low strategy, you actually have a much higher chance of being successful the lower that you can get in. So whenever you can, when you're using this higher low strategy, make sure you buy low as much as possible. And that'll help you to avoid kind of these break even trades that I took on trade 1. Now we see the uptrend continue. We see a few higher lows, but none of these higher lows really gave me the opportunity that I was looking for, except for this one. But I tried to put my order in. I think the market came about 1 or 2 ticks away from my entry and then moved away without me. And the same thing happened up here at this higher low. So sometimes when you're going through the market, you might see your best setup start to form, but you might not catch it because you're trying to catch the exact best price. And that's okay. You know, you always want to get your trades from the best possible levels. And if you don't, the one thing you don't want to do is chase the market and try and follow it all the way back up as it continues to move away from you. So I think today I did a really good job of just being patient enough to say, look, I saw my setup. I put my order in. My order never got hit and the market moved without me. So I'm not going to chase it. I'm just going to sit here and wait for the next best opportunity. And that's pretty much where it led me to trade number 2. So if we look at trade 2 right here, the notes say that I went long here as prices came back to retest the support of the higher low. So that's pretty much exactly what I was looking for, and it lines up with my higher low strategy perfectly. We see that the trend was clearly up. We see that prices pulled back, created this higher low, and then started to move away. So as soon as they came back to retest that level, that's where I wanted to go long. Now right here, prices did move up in my favor a little bit, but came back to break even. And after that, I closed the trade. And I think I did a good job right there, because if I didn't do that, my stop would have definitely got hit. And also, I don't think I mentioned this when I started the video, but today, as you can see, I did trade the S&P 500 instead of trading the Dow Jones. I'm not quite sure what was going on with the platform, but it was some technical difficulties that wouldn't let me place orders on the Dow Jones. So I had no choice but to come over here and trade the S&P or trade the NASDAQ. But I like the S&P because you can get a lot of size off without having too much slippage at all. And I think on the S&P, you can get more for your scalps compared to the Dow Jones, because on the S&P, I'm really just trying to catch 1 point with a couple of contracts. On the Dow Jones, I might have to trade like maybe 4 or 5 contracts and try and catch 10 points, which is kind of equivalent, but not exactly. And that's something that I'm kind of trying to figure out too. I'm trying to figure out whether or not I want to keep trading the Dow Jones or if I want to trade the S&P. But anyway, back to trade number 2. If I would have let my trade stay open, I would have came back and got stopped out as prices peaked back down below that level of support. So I think I did a good job right here, just closing my trade on trade number 2 when I saw that the scalps were not working. And when it comes to a very small scalping strategy like this one that I'm using, you want to make sure that as soon as you see the market start to kind of fall apart and the same reasons that you got in don't really exist anymore, you want to make sure that you do whatever you do. Do whatever you need to go ahead and get out of that trade. Don't wait. Don't sit there and hope that it'll come back, that it'll bounce back, that maybe the buyers will step in. No. It's no room for uncertainty when you're trading a micro scalping strategy like this, because every single tick matters and it makes a big difference. So you got to make sure that if you don't see what was there before, you go ahead and get out. So that's one of the biggest lessons I learned right there on trade number 2. So after we peak back down below that support level, we see prices come back up, reclaim that level of support, and form a higher low above it. So after I saw that higher low, I circled it up and drew my level of support across it. And then I looked to go long as prices came back into that level of support right here on trade number 3. So the notes say I went long here as prices came back to retest the support level of the higher low. And when it comes to the higher low strategy, that's a textbook example. This is exactly how it should be done. You wait for the trend to be clearly defined as being up. You wait for a higher low to get formed. You draw your level of support and go long as prices come back to retest that level. So good job right there on trade number 3. Now after that, we have a lower high that gets established, and from that point forward, a downtrend started. So from that point, we started to create lower lows, lower highs, lower lows, and lower highs. So that pretty much brought me to this area that we're looking at trade number 4 and at trade number 4A. So if we read the notes, it says I shorted here at trade number 4, expecting for the selling to continue, but I shouldn't ignore the higher lows. And I know it's kind of hard to see, so let's zoom in a little bit and really break this down. So right here, we came back, retested this major level of support, and we saw a pretty good bounce off of that up to the next level of support from this higher low from before. We stayed above that level for a good little minute. So if you think about it, if we start from this bounce, we pushed up, pushed down on this one red candle right here, and then pushed up again. So these two candles right here represent the higher low. So for me to come back on trade 4 and try to go short right here, even though it's a higher low right immediately to the left of it, that's not a good idea. Because one of my biggest rules and one of the biggest things I learned in the market, and I learned this the hard way, was that whenever you see a higher low get formed in the market, I don't care how strong you think that uptrend might be, you need to get out of all of your short positions no matter what. Because more than likely, there will be some type of bounce after you see a higher low. It doesn't mean that an uptrend would start from there or that, you know, it'll be the biggest uptrend of all time. But you got to realize that a higher low leads to more buying more than not. So anytime you see a higher low, no matter how much you believe in a downtrend, you got to get out of those short positions and avoid taking any short positions until you see that higher low get broken back down through again. So that's usually how I like to use the higher low strategy. If it's above the higher low and comes back to retest support, I go long. But if the higher low, if prices ever come back to that higher low and break through that higher low, that support level now becomes resistance, and you wait for prices to come back up, retest that resistance, and then you short it. So that's pretty much what I did on 4A, I want to say. Right. Okay. So on 4A, notice how it's hard to see because of these executions, but just ignore the triangles for right now. So this right here was the next higher low in this sequence right here. So if we circle it up and draw a level of support across, you pretty much run into the same area where I shorted from at 4A. So that's what I'm talking about when I say you wait for prices to break past a previous higher low. And once they break past that higher low, you short as they come back up to retest that level, because that higher low should now act as a resistance level in the market more likely than not. It's not always guaranteed to happen like that, but you kind of increase your odds of having it work out that way for you when the overall trend is also down. So if you look at it, we actually, on this one wick that came back up, we came back up to retest what used to be a previous lower high. So this was lower high number 1. This was lower high number 2. So all we really did was come back, retest lower high number 2, and then we got rejected once again. So then once I saw that higher low get broken through, that's when I had the green light for the short trade. So I think 4 and 4A represent a very good example of what you should do when it comes to a higher low if you want to short that, and what you shouldn't do. So you shouldn't jump in front of the higher low and try and short it before the higher low gets broken. But what you should do is, if you do want to go short, wait for that higher low to get broken, and once it does, then you have the green light for all of your short trades that you're looking for. So big lesson learned right there. So that brings us on to trade number 5, and just in between trades 4A and trades number 5, we saw the downtrend continue. We had lower lows and lower highs, lower lows, lower highs, lower lows, and lower highs. So once we broke back down past this previous swing low that was established right here, I said, okay, we're in a downtrend. All I want to see is prices come back, retest that prior swing low, and then I want to short from there as prices start to move away. And that's exactly what I was able to do on trade 5. I shorted here during the downtrend, as prices retested resistance. Now, this trade was profitable, but I would say that this trade was definitely a little bit risky because, for one, I was shorting near the lows of the swing, which if you watch any of my other videos, you know that this is something I should not be doing. And I know this is something I should not be doing. So I think I dropped the ball right there. And even though I made profit on this trade, I can't say it was my best entry because, for one, we were just too low in the swing of prices moving down for me to feel comfortable. And if you also look at it, the overall trend for that day was still up. The downtrend wasn't really actually like 100% confirmed until we break past this higher low right here, because this one right here, a little bit higher from earlier, represents the first major level of support during the uptrend, and this one is the second major level. So once both of those levels get broken through, then you can say, oh yeah, we can short as much as we want to. But what I've learned, and what I've learned the hard way, is that a lot of times when you're in a strong uptrend, prices will come back to those major levels of support, and then that's when they bounce and start moving. So even though I made profits on trade 5, I wouldn't say that was my best entry, and that's definitely something I got to work on and clean up. I cannot go short towards the lows of a swing, no matter what the circumstances may be. So after trade 5, we pretty much started to establish a zone in between 4405 and 4400. So all I did was try and play the zone, but not initially. I really didn't realize it was a zone until after trade 6 and 8. And on 6 and 8, I kind of lost my discipline a little bit right here, and I broke one of my rules, which was, in times of indecision, don't make any moves at all. You don't have to trade when you're not sure. You always want to make sure you take a trade that you're 100% confident in. You don't want to take a trade where it's like, I hope it works, or maybe it might. That's not what you want to do. You can do that on your demo account because that's for learning. But in terms of your real accounts that you're trading, you do not want to get into the market when you're not 100% sure about what you think you're seeing. And that's pretty much the problem I ran into at 6 and 8, because on 6, I went long here based off of this higher low support level, and I expected for that to be respected. And honestly, I would say that that's a good trade because that's my strategy right there, and sometimes it just doesn't work. So I think on 6, that was a loss I felt like I had to take. I'm okay with that. But then on 7, I just don't feel like that's the best trade because, for one, I see prices bounce off of a major level of support where they already saw a significant bounce before. And remind you, we just talked about how the overall uptrend was still up. So if you were to look at this on a 5-minute chart, this whole area right here will really just be a higher low. I think on a 15-minute, it will also be a higher low too, in comparison to where we came from over here. So even though on a 1-minute, it looks like the trend might be down, overall, the trend is still up. So for me to try and go short as prices are bouncing away from a level of support, that's just not a good idea for me, because for one, I'm trading against the momentum in the market. And whenever you scalp, you do not want to go against the overall direction that the market is moving. You want to participate with that movement and ride the wave. You don't want to try and go against it and swim against the current. So that's one of the biggest reasons why I definitely should not have taken trade 7 right there. But then I came back on trade number 8, and right here I was just flip-flopping. So on trade number 6, I was long. On trade number 7, I was short. On trade number 8, I was long again, and really wasn't a real reason to go long right here, other than the fact that I was frustrated from trade 7 and I wanted to revenge trade a little bit and try and get that money back. But that's something that you got to avoid no matter what the circumstances might be. If your trade doesn't work for you, you just got to let it go, and then you wait for the next best opportunity. So that's pretty much what I had to learn right there, and I had to learn that the hard way. So I come back on trade 9 and make the right decisions right here. So I realized that it was a zone. So I say, okay, if we're in the zone, what I should do is go long from the bottom of the zone and expect for that move to actually be successful, because more than likely that's where the demand should be coming in from. So on trade 9, that's pretty much exactly what happened. I went long here at the lows of the consolidation zone and was able to catch my scalp right there. And also, if we go back to trade 6 and trade 7, another thing that you don't, and trade 8, another thing that you don't want to do is get into a zone or try and play the zone from the middle. When it comes to trading the consolidation zone, it's two things you want to do. You either want to short it from the top or you want to go long from the bottom. but anything else is really just a very low probability trade because the market could go either way from that middle point that you're getting in from. It could go up, it could go down. You never know. So remember what I said about those instances and occasions where you don't know, you stay out of the market. So just a lot of lessons to be learned between trade 6 and trade 9. But I think I was able to kind of get my mojo back, and then I came back on trade 10 and I went long here after the support of a prior higher low was respected. So this actual higher low made sense because it was a lot more clear, a lot more well defined, and you look at the fact that we had a original swing low right here and came back to establish this higher low. So this higher low got retested 1 time and 2 times. So after 2 tests of a higher low and you see prices continue to move higher, that pretty much tells you that the buyers are definitely strong in that area, and you have a much higher probability of being successful and making profits if you trade with the buyers and go long. So that's pretty much the idea I had at trade 10, and that's why I went long as prices came back to retest this level of support from this higher low right here. So that was trade number 10. That was part 1 for the day. That's what I did from the morning session up around until noontime. And then we have part number 2, which is the afternoon session that I traded. I have 4 more trades here, so let's talk about that. So trade number 11, I shorted here in front of buying momentum, and it's important to remember to always avoid trading against momentum like we was talking about a little bit earlier, because look at how strong this downtrend was right here. Once we came back and retested this level of resistance, we sold off hard and pretty much didn't see any buying come back into the market until we got down to these lows around 4,392. So we bounced back up, came back to retest this level of support. Well, what used to be support, but is now resistance. And looking back on it, this was probably the area where I should have went short from after I saw prices get rejected from resistance. And then I should have shorted and held it back down to the bottom of this swing. That would have been the ideal trade. But I was like, I don't know. Since I missed that trade, I'm like, okay, what's the next level of resistance that I would like to short from? So I looked at the close for this candle in conjunction with these wicks down below and pretty much drew a mental zone in between the bodies and the wicks. So I'm like, okay, if prices come back to retest that wick, I'm shorting it because I expect just a little bit of a flush to the downside. I don't expect prices to come back and retest the bottom of this wick because the long tail wick was so long, and I'm like, that's definitely momentum. But I just felt like and was hoping that I could get a little bit of selling, the last bit of selling, to come back in and fill my profit target. But that's not the case. And that goes back to what I talked about before when I said that you don't want to hope that your trade is going to work and say, oh, maybe, if everything works out, let me just catch this one time. No, you got to make sure you short, or if you go long, wherever you get in from the best possible levels and the best possible prices. If you see momentum coming into the market and you're trying to scalp and you have a very tight stop, you do not want to go against that momentum, because more than likely that momentum is going to keep running. You never know when the momentum is going to die down. So you don't want to get in front of it until you see it actually show you signs that it might be fading out. And in this case that I'm looking at on trade 11, there was no signs at all that the market was going to fade out. So I took a loss right there on 11, and I definitely learned my lesson from that. So after trade 11 got stopped out, we see prices come back up. After we made a large move to the upside, we came back and created this higher low. So I circled that up and drew my level of support across it. And I was looking to go long as prices came back to retest this level, but my entry was just a little bit off, a couple of ticks away from the actual lows that got established. So I wasn't able to participate. But I did see prices break past the area that was break past the swing high area that was created from this higher low. So then I was like, okay, I see that the trend is clearly up. So more than likely prices should come back to retest this prior swing high, and then we should find support right there. And that's the reason I went long at trade 12. So I went long here as prices retested a prior swing high after a higher low was formed. And a lot of times when you see a higher low and you're not able to get it off of that retest when it comes back to support, on not all occasions, but on a lot of those occasions, you'll be able to catch prices as they come back to retest the swing high that higher low made. So always keep that in mind if you're not able to actually capitalize on that retest of the support level from the higher low. Always something to remember. So after trade 12, we see the prices continue moving up. The uptrend continues. And then we created a higher low right here, but it wasn't the strongest higher low. And you can judge the strength of the strength of a higher low based on how wide and how large, well, not how wide, but how large the candles are for that particular higher low setup. So if you notice right here, yeah, it was a higher low, but look at how small both of these candles are. Not only the red candle to the left, but the green candle right here. That's super small. And yeah, it's a green candle, but it's definitely not the strongest. And higher lows like that have a much higher tendency to get ran through. So the reason I went long right here at 13 was because I was like, okay, this higher low is definitely weak, but the trend is up. So if the buyers are going to come in, they will probably come back in at this level of support. So I just wanted to catch a quick reaction off of that level and just get my 1 point scalp. And that's what I was able to do at 13. So went long as prices came back to support, caught the quick reaction, and I moved on from that. Now eventually prices come back up, retest that level that they made right here from this prior higher low, but was never able to break past it. And that's pretty interesting because with all the momentum that we saw, for prices to not come back up and create a new high, it's like, the buying is kind of fading out a little bit. Now, anytime you see the buying start to fade out, it doesn't mean that you just start shorting immediately, but it does mean that you could potentially start looking for your short trades to set up. You always want to make sure you get those lower highs first. You don't just want to short because you see a double top. You always got to remember that the trend is up. So just a little nugget to remember right there. So we push back down, create a higher low right here, but nothing really came to fruition from this level. And I didn't like what I was seeing right here. So I just pretty much stayed quiet throughout this entire period and just watched what was going on. And then I see prices eventually shoot all the way back down to this level of support that we established a little bit earlier. And then that's when the buy-in started to resume. So after we got that bounce off of support, we had this first higher low that got formed. We played around in the zone for a little bit and then finally made a new higher low and the uptrend continued. So after we came back to retest that higher low, we moved up again, came back close to resistance, and we actually hit it this time. But as soon as we came back, I went long right here on 14 because I recognized that the trend was up. I saw that we made a higher low right here. We had the support level right down below. So I said, okay, that's my setup. I'm taking it when I see it. And I was able to get my 1 point scalp off of that. And then after that, I said, you know what? I'm going to call it a day because it was 320. The market was moving kind of slow. And I usually don't trade the S&P. So for me to actually finish the day and profit and be up, I said, look, I need to lock this in before I give it back all the way. And that's the reason I stopped today at trade 14. So, you know, overall, today wasn't that bad of a day. You know, for me to come in and trade a completely different pair than what I'm used to and still be able to make profits on the day, I think that's a very telling sign for me. And it's really boosting my confidence a lot because that's letting me know that the strategy that I have is good and it's legit as long as I follow it and stick to my rules and what I actually need to do. So I'm at 372 right now. My goal for this account is to get it up to 30,000. So another step on the journey towards that 5,000 number, but we still got work to do and it's a lot of improvements that I can make. And I think one of the biggest things, if we go back to part number 1 and we look at trade 6 through 8, this one right here, I think this is the biggest lesson I learned today, which is a great entry is mandatory for all of your scalp trades. Always. You always want to make sure that when you're scalping in the market with tight stops and tight targets, you gotta have a good entry, because I think today where I went wrong was I came into the market with the mindset of a scalper and I was like, you know what, I just need 1 point. I only need 1 point. And it kind of made it seem like that 1 point was just gonna come easy, like the market was gonna just come up to you and say, hey, take this 1 point, that's all you need right here, all right, get out of here. But it's not like that. Whether you're trying to catch 1 point in the market or you're trying to catch 10 points, you got to work for that and you got to earn that, which means that you have to make good entries no matter what you're looking for. You could be looking for 1,000 point trade or a 1 point trade. You still need a good entry. And if you have that, the market more than likely will reward you for it. So I think all of the trades that I made today that were losers, all of those were just bad entries, especially 6 through 8. I had to learn a lot of lessons right there. Just bad entry after bad entry after bad entry. Those trades are going to hurt you because the market is not going to play around and say, oh, you know, we'll give you a pass this time. That's not how it goes. You take a bad trade, you take a bad entry, don't be surprised if you have to take a loss following that. So that's what I need to clean up right there. Just focusing on still taking my best entries. You know, this scalping strategy is different from what I usually use on my I'm not gonna call it swing strategy, but I would say, like, I don't know, my 20-point strategy on the Dow Jones. That's what I'll call it. This is a similar variation of it, but it is some differences and similarities. But one of the similarities that's constant throughout both of these strategies that I use is that you have to have a good entry. And really, that goes for any strategy in the market that you decide to use. If your entry is not good, the market won't reward you. So that's my biggest lesson that I learned, and that's the biggest thing I need to improve on. And I'm gonna work on that tonight in my back testing session, get that right, and then come back tomorrow and look to make some more profits and actually be a lot more productive. Because even though I finished today in profits, I'm still not happy with my performance, because if you look at it, I took 14 trades and I was looking for a 1-point target on each one of those trades. So all in all, I had a potential to make 14 points. And from those 14 trades, I came away at the end of the day with 1.5 points in profit, because I traded 2 contracts, and on the S&P it's $50 a point, so it's $100 per point per contract, per point for every trade that I'm doing. So to finish the day with 1.5 points when I took 14 trades, I just don't feel like that's maximizing my potential. Out of however many number of trades that you take, you should at least get a quarter of what your expected profit target would be. So today, 14 trades, my expected profit target would be 14 points. A quarter of that would be 3.5 points. So for me to be like halfway towards 3.5 points, that's not really my best performance. So I got a lot that I need to work on today. I guess I'm happy that I made profits, but it's definitely a lot of room for improvement. So I don't want to keep rambling for too long. I'm gonna go ahead and get off of here and get this studying in. I appreciate you guys for tuning in with me. I hope you learned a lot today about making sure that you take the right entries, especially if you want to scalp. I really hope you learned a lot about that today, because I definitely did. I'll be back tomorrow on October 17th, 2023, ready to run it back. But until then, you guys, have a good one, study hard, and take it easy.